Okay, today is Thursday, August the 13th, and I'm just going to show you a couple of things that show that we are range bound. First of all, the oscillator dropped. No big surprise. The summation index continues to rise, and that's a forward indicator. The volume continues to steadily drop. And the advancers and decliners shows that now we had decliners leading advancers today. The A/D volume is dropping, and look at this. The moving average of the 20-day advancers to decliners is dropping. But if we look at our 0, 1, 2 charts that we've talked about before, we're getting solid 2s. So that is not an indicator of breaking down. It's just an indicator of stability. So let's now look at some charts. Here's the 3 charts that I want you to look at. Here's the S&P 500 15-minute chart. You can see that it started out, this green zone is the first 15-minute trading range, which ended right there. Then we moved up, pulled down, and we stayed within the first 15-minute trading range. But we're still below our all-time high on the S&P. Meanwhile, the Dow Jones is being given an opportunity to catch up. This gap, by the way, is now history, so we can get rid of that. But we're still struggling between 78.6 and 100%. The NASDAQ, on the other hand, continues to get resistance at 138.2%. This is a weekly chart. So now let's switch to a daily chart. And you can see on the daily, how many days have we had resistance at 138.2%? 1, 2, 3, 4, 5, 6 days. So the NASDAQ, I think, has reached an important point. Let's look at our 3 charts again. But the S&P is still flirting with 33.93. And as long as that's in range, it's going to happen. We're still waiting for the Dow Jones to catch up. But the NASDAQ is sitting in a waiting position. The S&P is heading for a waiting position. But the Dow Jones, of only 30 stocks, mind you, still has a bit of a way to go. So Apple, stellar day today, was really up big at one point and then pulled back a little bit with the rest of the market. But it's definitely going to 468.58. We've had enough bouncing around the 127.2. We're heading to the 138.2. Caterpillar, this weekly trend line is proving to be deadly. Look at this. Where do we finish today? Right on this trend line, which started in January of 2018, had its next reckoning on December of 2019, and now here we are again. This week it hit it and pulled back, and now we've done it again. Definite line in the sand. Home Depot coming up to the 138.2%, but not quite. So it's still a strong stock. We have another Fibonacci. Let's see if we can drag this one over. We can't seem to. But if we look at this 138.2, it's a little bit above this 127.2 and between this 138.2. So we've got a possibility of Home Depot just bouncing around this value of 280. AT&T pulled back. Let's take a look at the banks. The banks today were all in the red. Not a great deal, but all in the red. That's important to have the financial infrastructure in place. Whirlpool continued today to just keep on motoring higher. Even though it pulled back to a loss of 12 cents, it's still doing fairly well. If we look at the volume is extremely weak. but it's still being attracted to this high of 216. So here is the message. This is a 15-minute chart for the S&P. It's still looking for a 33.92, but it's waiting for the Dow Jones to reach 29,568. So the 30 stocks of the Dow Jones have to prove to the market that they are the leaders, and the other 220 stocks in the S&P 500 are going to follow. And then the NASDAQ 100 has already proven that it's strong, but there's some doubt. So 138.2 is the resistance. So keep your eye on the Dow. Keep your eye on the S&P 500. The first one to hit 100% is going to signal a move.